All right, good morning, everybody. We have the big dog today, 30-year auction. We do have some job numbers, which go right to the Fed's dot plot. So, and a little bit of anticipation there. And we also have a lot of European data coming in today. So before 10:30, while the European data is still coming in, I guess, yeah, now they're looking at it, maybe a little past that too, because we're going to have speakers. European Central Bank, all the way up till 1 o'clock. Yesterday, I had mentioned how we had a lot of Fed speakers who were all very likely going to come out and sing from the same hymn book, trying to spread a single message. And the message that they were working on trying to spread was that the hawkish comments from Powell weren't a bluff. And if you're, trying to wrap your head around why they think there's a bluff, the Fed can't say that they're going to pivot, even if they really are going to pivot. Because if they say that, we're going to explode to the upside. And that goes against exactly what they're working to avoid. Last year, they gave this shady gray area target rate of 5.1 with a cap somewhere around 5.7, 5.8, somewhere in that range. And they said our goal is to move into slightly restrictive territory and hold it there to kind of absorb this extra money floating around. And that's what they've been working to do. But their struggle is, what's mildly restrictive monetary policy? If 2% is their neutral rate, quote, quote, how far beyond 2 do you have to go before you're in this mythical, mildly restrictive area? So they had the low end and the high end. 5.1 was their low end. And Powell came out talking about how not only does it look like we're going to, stay higher for longer, but that 5.1 very likely now doesn't look like it's going to do the job, and they're going to have to go even farther beyond that. The market, he was hawkish. The market just looked right through all of that, basically ignored him, because they know we're coming close to this mythical target and that he can't say we're going to pause, even if we are going to pause. So we rallied after Powell. The next day, all the Fed speakers that were on the agenda, they all came out trying to spread the word that, like, hey, he's not kidding. We got to keep going. We're not going to pause at 5.1 now. We're not going to, that would have put us into pause around July. And now they're saying, nope, it's not looking like that's going to be the case. And so the market finally got the message and started to pull back a little bit. But that's all we had, was a little bit of a pullback. Now it shows the 30-year bond auction being a light impact econ event for today. I don't disagree with that, but I want to stress that in the current market conditions, this has the capacity to really rattle the market. So keep your eye on the 30-year bond auction today, just like we were all watching yesterday with the 10-year. The 10-year is a really big deal. It's one that you watch close. The 30 is also a big deal. We got tips today too. I'm not seeing it in this list, but we'll see it when we get over to Thinkorswim. And the economic growth forecasts are also going to come out of the European Union today. And that one can shake the market up a little bit as well. If you want to know how to play that data, there's an Excel for Europe, right? Like an ETF for the different nations. You can look at something like FXE. This is Euro. You can see it at least has weeklies, right? The bid ask is not exactly amazing, but it's not too bad. We've seen worse. It'll do, right? All right, we're still inside week. This is the only thing that matters. We're holding above last week's midpoint. We haven't crashed and burned. We've still got a lower trend line that we haven't even touched yet. And we've still got that magnet over our head that is a gap, a weekly gap. $42.28. So there's this market logic that says the longer we hold above a support level, the more likely it is that we won't fall through it and that we will continue beyond it. I get the logic, but if we're only holding there because we're waiting on data, then the data will be the driver, right? Not the idea that we managed to hold above some mythical level. All right, we do got a nat gas report at 10:30. And then we have auctions at 11, 11:30, and 1. That's a full house. That's the 3 time frames that we can get auctions on, because we don't get them at noon and we don't get them at 12:30. So 11, 11:30, and 1. Full house. At 11 o'clock, we're going to get the tips announcement. So big deal on that one. And then at 1 o'clock, we got the 30-year bond. You like it. Germany just did their CPI. I believe you should be able to catch it on Finance Juice. All right, so the volume is within the norms. That's all we need to see. Turn that sucker off. Get it out of the way. We had a nice recovery off of the lows yesterday, and it started with, some reasonably decent earnings from a couple of different places out there, including Disney. I managed to grab a call right before the close. Honestly, I forgot that Disney was reporting until right before the close, so I really didn't have no choice. If I wanted to participate, there wasn't time to build anything complex and work the order. So I just bought a call. What we're going to be looking for this morning is an inside day breakout. Now we've got a reasonably decent range to deal with from Tuesday and from yesterday, right? Both of those. So when you're thinking of the ranges, you really could spread it out and break all of this down into quadrants. You have yesterday's RTH, 41, let's just round a little, 41.70 down to 41.20. It's a nice 50-point range. Then you have the low of Tuesday, run that all the way up to the low of yesterday. That's another quadrant. So 4,100 round numbers, right, to 41.20. It's a nice 20-point range. And then the high of Tuesday to the high of yesterday, that's your third quadrant. And you're looking at, call it 41.90 down to 41.70. It's another 20-point range. So 20 points, 50 points, 20 points. 3 distinct zones to deal with. And right now we're still inside that middle quadrant, that middle zone. This will help out quite a bit when you're struggling with technical analysis on highs and lows, reversal points, reversal zones. It's hard to learn to draw lines and not see them as a line, that you're drawing a trend line to represent an area, right? It's the phrase I use most often is just imagine that you're using a big, fat, dull crayon when you're drawing with that line, because it needs to be more than just a very sharp, thin pencil slice. So when we get into this upper quadrant, we want to be looking for signs of continuation, signs of reversal. Very often we'll build, a bit of a base, we'll consolidate, and then we'll start getting some reversal implications, and then we start dumping back down again. Same thing on the lows, although the lows more often than not, well, I don't want to say it that way. The lows often give a more of a V bottom style, right? That we just get down there and tag a spot and turn and go. But either way, think of both of those as the zones where those reversals would be focusing in. From that, you can break it down even more into the individualized pivot points that we generally focus on: open, high, low, and close, which includes the open of the RTH from yesterday and the open of the Globex from last night. And then, of course, the high between Tuesday and Wednesday and the low of Wednesday's RTH. You got all these lines on my chart. They all represent some form of pivot that we should be paying attention to. High at Globex, low at Globex, low of yesterday, high of yesterday, open of yesterday. We still have a very narrow average daily range at about 1.5%, and we don't have a market maker move on deck this morning. So there's not really an anticipation of fireworks. We have a 200 range volume profile right now, 10-day, 30-minute. We're starting to get that classic B shape. And we still have a significant shallow zone here below 4111 cog line. I've been focusing on 4100 flat, right? It doesn't need to be the cog line that we pay attention to, but you can see how we came down in there and we really held the line. I keep saying if we break through that zone, we're very likely going to visit 40.70, 40.60, and yet we continue to just wick a little lower and recover, and wick a little lower again and recover. So, it kind of validates the idea that price can do whatever it wants, and that even if we can recognize areas like this where it's likely to move quickly through it, Price can do whatever it wants. Still, if we get tangled up below that number, 40.50 is very likely going to be the midpoint of this. It'd be the area of focus for a downside break. Next Friday is OPEX, but that is a long ways away. I think this 5-day, 5-minute volume profile chart here kind of really brings into focus this going nowhere situation that we've been in. We've been here for a while. And I've continued to talk about the RSI Laguerre because it's measuring how this energy is forming and building up more and more, and that when a market sits sideways like this, it's doing more than just sitting here. It's actually gathering energy. All right, so the lower trend line is going to be your line in the sand. I wouldn't struggle too much on where you draw it, right? It doesn't have to be spot on perfect. Nobody is going to see your line but you. The market can't see your line. It's just a visual guide more than anything else. If we're going to break and revisit these lows, then we've got to get a TRB, right? TRB, trend line breakover. $3,800 is the downside. Very likely not going to make all of that in one shot. We were talking about 4,000. Oh, what the heck? So 4,000 is what we want to pay attention to, but we would still have to get through 4,100, which is the midpoint that we've been focused on all week. So it almost lines up in hundreds, right? From 42 to 41, from 41 to 40, from 40 to 39, yada, 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 yada. One thing worth noting is that we had our Busby, and then we failed to even get back to the target from the Busby, also giving us lower highs. So the idea behind this is something's got to give. And there's still not a solid narrative right now, which is where a lot of the struggle comes from. We are 3.3% away from the 10-week moving average. We managed to hold it after moving away from it back near the first week of January. And the idea behind it is that we would pause and let that 10 get caught up a little bit, or that we pull back to it, right? But the pullback kind of implies some weakness. There's nothing about this market right now that screams weakness. Now, some really smart analysts continue to point out that this is just a bear market rally. That's it. It's just another bear market rally. I can't disagree with them. Data-wise, if you go out and look at, a lot of the tools that we could use to validate whether we're in a new bullish trend, a lot of those tools say, no, we're not in a new bullish trend. At the very least, we're perhaps just about to start a bullish trend, but we're not there yet. And that doesn't even count the economic numbers that are coming through, which also suggests, no, we're not in a bullish trend yet. It's still just a bear market rally. Nat gas is down yet again this morning. I mentioned, a few days ago that very likely we weren't going to just V bottom here and run away, that we were going to have to build a base, consolidate. Remember, they want to run this back up by themselves. They don't want to share the trade with you. They want it all to themselves, and they need liquidity. They're trying to buy up as much of this as they can, and they can't buy it if you're buying it. So they need to convince you to sell it. Grimes goes through that a little bit in his book, right? About the shenanigans that we see played for liquidity to come across, right? So they've got to convince you to sell your position so that they can take your position. Yeah, it's in the books section when you're on the Discord. You have to scroll all the way to the top. There's 2 books that I shared that are in that channel. One is Hit and Run Trading, and the other one is The Art and Science of Technical Analysis. That one is written by Grimes, and it's a free book. You could just Google it, and find it for free on the web. I had already found it. I threw it in the Discord. It's a great book. It's an old book. I'm sure you could find a much more modern, popular version with really beautiful, clean, fancy charts. But it's an old book with old bars and black and white pictures. And yeah, I do like the classics. I thought he wrote really well. When you put those 2 books together, you get technical analysis and strategies. So, I mean, it's a great combination. So we really want to see this prove the base. It wouldn't surprise me if we actually set a new low. It kind of forms that same logic that they want your position. They need to convince you to sell. By taking it lower first, they can kind of accomplish that. So it wouldn't surprise me to do that. And if you think of classic like Wyckoff theory and classic Dow theory, accumulation and distribution and the choppy sideways areas, we would expect this to form a big cup eventually, right? This big scooping, cupping pattern eventually. So the difficult part of all of it is you either have to get in and wait through the pain, or you have to sit out and hope that it doesn't do this massive runaway explosive thing in a single day and leave you sitting behind. I was taught to trade that when the market is strongly moving higher, you're carrying a perpetual short because you can't call the top. And when the markets are moving lower, you're carrying a perpetual long because you can't call bottoms. You just have to be able to sustain carrying a short in a bull market and carrying a long in a bear market, which, thanks to options, we can do. The rally in energy was only supposed to be a rally into resistance. So we talked earlier in the week how the WTI had broken through and had actually closed below the trend line, while Brent crude had only wicked below, closed above, and had already started a recovery. But there's still just a rally into resistance. So we're not really looking for, a significant turnaround in energy. And we started to see that weakness in the later part of the day. So 82 for Brent would be the higher, or for WTI would be the higher end of that. And for Brent, 88 would be the higher end. But I would expect some front running. So 80 on WTI and 88, maybe 86, excuse me, on Brent. For the for nat gas, I think I've got April. Let me look at the options real quick. I don't want to get you pointed in the wrong direction. Yeah, April. You could go with March if you really wanted to bring it into the front a little bit. I like April because you can defend it better. It has more room in the front to like sell calls, try to make some of your money back. And if you look at March 17 at the money, say just those $9 strikes. The midpoint, is about 66 cents versus about $1. They're not too far apart. If it was a drastic difference, maybe we could make a case argument for stepping, up into March just to try to use some cheaper options, but they're really not too far apart. You could give up one strike, right, and use the 10 strike in April for the same money as the 9 strike in March. I mean, that's a real nice dichotomy there. Like, just go ahead and take April. Nice liquidity. Compared to its peers, the liquidity's not bad. I'd go with March. It has a $3 expected move for March. So you could kind of front run that a little bit. If you're looking at a $1 cost on a $10 strike with a $3 expected move, and we're sitting at 8, that would be $11 for your break even and $11 for your expected move. So it all kind of comes together. Got a lot of resistance at $10 to deal with. Those March series options at the $10 strike. All right, the China names are up this morning. The K-Web that we use, 3.27%. %36 of the NASDAQ is up more than 1% this morning. And those China names stand out. PDD, Lulu. I honestly had expected to see JD and Baba and Baidu, but either I'm scrolling too fast or they're just not in there. And a bit of a surprise. But we do have a lot of the FANG names from yesterday: Apple, Meta, Netflix, NVIDIA, PayPal, and Tesla. 18% of the S&P is up more than 1% this morning. I see quite a few chip names in there. %47 of the NASDAQ is up more than 0.5%. I know that might feel a little bullish, but it's mildly bullish. It's really not much. This very easily could be just a market that found a little bit of support and is now going to rally up into resistance. Not a whole lot of follow through is expected. And that big candle from the other day is what we want to focus on as our breakout, or even just last week, right? Looking for an inside week breakout. So here we've got the S&P 500. We need to filter it down to 100 names. Just do that by market cap. Try to get as close as you can. 98 is good enough. It's got a lot of gray in it because the metrics for this, it won't start changing colors until something has moved at least 0.5%. Like Berkshire here, it turned green because it moved 0.56. So all of these gray names that you're seeing, they haven't moved far enough. And I stop here before I do something else because that 50% mark is my line in the sand for how far something has moved in the pre-market. So while I want to change the colors, I don't do it yet because this is the easiest way to see that metric. The size of the box reflects the market cap. So it's really easy to see the fangs and to see names that are big in their sector or in their industry, in their space. Amazon, Tesla, Apple, Microsoft, NVIDIA, all FANG names. Meta, all doing really good. Google is still trying to recover from yesterday. I thought they had said something wrong and dropped the market, but it appears that their AI equivalent for ChatGPT called Bard had some flaws in it, and it basically took the whole space down with it. As it probably should, since they've been working on their AI side of things since 2017, and we're supposed to be way ahead of the crowd. Speaking of chip names, AMD and NVIDIA are both up more than 1.5% this morning. Intel kind of lagging behind at near 1%, but not there. Energy's looking pretty weak, but not negative. Finance is looking really good this morning. I'd certainly be keeping my eye on that. Now, remember what we talk about a lot when we're looking for a rally. We want at least 2 out of the 3 risk-on sectors. The risk-on sectors are finance, technology, and consumer discretionary. If we only have 2, it usually comes down to finance and consumer discretionary, or tech and consumer discretionary. But if you have tech and finance both working together and both moving in the same direction at the same time, then you really start to get one of those rip your face off rallies. A rising tide lifts all boats. So at some point, when you get too much upward pressure from finance and technology and consumer discretionary, it just starts to sweep everything else up with it. And then we start looking for that high correlation coefficient. 98, 99, even 100 names all out of 100, all moving in the same direction at the same time. So that's what we want to be looking for this morning. I see a lot of flat out there. I don't see a lot of negative. Flat can be brought up and swept into the craze and turn into that rally that we're looking for. And even the names that are up, Microsoft, NVIDIA, Apple, it's not like they're up 5, 6, 7% this morning. They're mildly up with room to expand. Tesla's up quite a bit. PayPal's up quite a bit. And of course, Disney had earnings, but it's not one of the names. Amazon, nearly 1%. So Tesla and Disney very likely are going to top out early in the day, having already made such a pre-market move. But these other names have plenty of room to run. Now we can change the multiplier and get the color scheme to adjust a little more. And man, that really just tells the story right there. And all of this is for the S&P. And the S&P is where the financials are at. We don't need to use a filter on the NASDAQ 100 because it's already 100. We have to change the multiplier to get rid of most of the gray. But before we do, we just kind of, same as before, want to take a look around. And at this point, what we're looking for is anything that stands out against the grain or against the crowd. It looks like utilities is where there's actually some weakness, not just flat. And services is a little flat. So we certainly got room for improvement on the NASDAQ side. we're still seeing this great rotation going on. It doesn't look like it's done anytime soon. Start with the airlines. All the airlines are doing good this morning. Only one name is below the, well, I guess two now. Two names are below the 50% or the 0.5% that I use. The rest of them, they're at least starting out good. There was a nice setup yesterday on AAL, and man, I got busy and I missed the whole thing. But AAL had a fake out and then a drop. It was just very beautiful. Missed the whole darn thing. You see how it gapped up yesterday, open gapped, tagged with an overshoot just a little higher than this peak, and down it went. This is a great setup. I missed it, but either way, wanted to point it out because it's a setup. When I see it, you know, it's something I usually focus on, and it's something that you can catch in the pre-market. I have the trend line, all these wicks showing all that pressure, and it gapped up, opened here. It tried to run, hit its head on this resistance, overshot, and down it went. Beautiful. So airlines look good. We mentioned the chip names or the chip space, which does include things like Texas Instruments, you know, and a few others. But for the most part, you want to try to break these down into, you know, try to make the distinction between something like Texas Instruments and Qualcomm or, you know, NVIDIA. But all of those are looking really good in their space, even Intel. So we're at this really odd point in crypto. It's nearly a make or break spot. So when I go to my crypto list, this list came from the Smalls Exchange. You used to be able to use the Smalls Exchange to trade these micro futures on Bitcoin. Really, what they did is they created a basket of stocks, like an ETF. I opened up that basket of stocks and I looked at what was inside the basket for their crypto futures product that you could trade. And I took the names out and used it for my watch list. And I don't know, some of the names kind of surprised me that I saw in there. Obvious names like Riot makes perfect sense, but there's names like AMD, PayPal, NVIDIA. Those aren't the names that come to mind when I think Bitcoin or blockchain. So kind of a surprise. So crypto's looking okay. These lower names are more of like a lot of ETFs and blockchain specific, low float, you know, not a lot of transactions going on a day to day. They're in my list because they were in that list, but they're not names that I really focus on. And I don't even know half of these. I just focus on these bigger ones, especially names that I recognize. The EV names are looking good, including the legacy names like Ford and GM, also doing good. Lucid, Rivian, NIO, Tesla, Li Auto, and Ride, all doing really good this morning. That's a Busby that we're looking at here on Ride. Yeah, it's pretty messy. So we do have a TRB. The move for Ride would be back into this 145, 150 area. The Busby owes us back towards the top, but I would front run that top 150. Is where I'd get most of my profit out. I expect this to be what it is. Trash. All right. Ramdo, thank you for mentioning that, because I meant to stop here earlier and I didn't. It's a part of the bullish thesis for today. So if you hadn't said that and I had forgot, I would have just been really frustrated afterwards. We're looking at a daily chart on the FTSE and the Hang Seng. Look at the TRB on the Asian market here, and today's close. They closed really strong, right? They had a beautiful indecision candle yesterday, and then an absolute amazing rally with an inside day breakout and an IX10 breakout today. Absolutely amazing follow through. And that bled over into the European session, which is still open. And they're having a really great day today with an inside day breakout and a follow through. Look at that beautiful scoop pattern. So this goes towards the argument that we'll have a good day today, bullish day today. Right now, it doesn't have to. So I can't stress enough. Don't think we're going to just go bullish because these two had a great day, but it adds to the check mark, right? It kind of adds to our bias on the day. We're sitting here looking at all these names that are mildly up in the pre-market and a carryover from the Asian markets and the European markets. And if you go to Finance Juice, they'll tell you what sectors did good last night in Asia and what's doing good now in Europe. So you kind of expect that bleed over into today. It's the whole purpose behind, the morning briefing is trying to evaluate what happened in the overnight hours from around the world, identify any risk, and get a plan for today on what we should be focusing on. Most days we're looking at a bunch of sideways junk and we don't know where to look, or everything's moving and it doesn't matter where we look. So when we can try to narrow that down a little bit and put our attention into a particular sector, industry, sub-industry, something to kind of bring things into focus, or at the very least, just get the word out that it doesn't matter what you hit. It doesn't matter what you trade. Everything's going to go up today. At least then you don't struggle trying to, specifically pick the right trade, right? If 99 out of 100 names are all going to go up today, it won't matter which one you pick. They're all going to go up. If you did want to focus on something more specific, then their beta, finding a high beta name, or liquidity, trading names that have, really good options pricing. That's where we get to be more picky and specific and strategic. So a recovery in the FANG names would be a good bet for today, looking in that area or in that direction, looking at those names. Microsoft, Google, Apple, Nvidia, Tesla, PayPal, Baidu, Baba, which reminds me, we didn't see those names on the list. Baidu's got a market maker move of 2.2% this morning. That was a heck of a drop off yesterday. Massive gap up and then now a big gap down. And now it's trying to rally back up again off of that. So just a whole lot of violence over there on that space. You have a classic megaphone showing too. Baba coming down into that lower trend line, building a little bit of a base. They're up $3 this morning. It's not bad. I would watch Baba today to see about this 110. The trade that I would like to take here is that it tries to run up, hits its head on 110 and dumps. That would be would be a nice trade. I would really like that. If it breaks out, I'm not going to like it as much, considering, it closed at 105. The breakout is at 110. How much more could we really expect this thing to go in a day? Well, I mean, price can do whatever it wants. But I mean, even running it into 114, the risk to reward just isn't there. You know what I mean? Like you got to try to figure how much longer is it going to go after it already went to 110. Got some shenanigans here in Tesla. It closed the gap momentarily just a second ago. This really is looking like a blow off top. So it closed at 201 and right now it's at 207. We've got this beautiful recovery here, this nice cup. And when I see a cup, I instantly start thinking, where's the handle? Right? Where's that pullback before the continuation? I can also see how we're getting this kind of a wedge here. It's really tight. But you start getting deeper into that OCR analysis, you get comfortable with messing with 7 to 10 candles rather than a whole year's worth, a 1 year daily chart. I thought there was a weekly gap close somewhere close, but the only gap that needs to be closed is way up here at 233. And I don't see us going there today. At least I hope it doesn't go there today because I'm not in it yet. So Tesla kind of fits the bill on what we were just talking about a few minutes ago. I'd rather see this try to retest a breakout at the open, come up to that 210 again, maybe overshoot it just a little bit and then dump. I would much rather play the short here than the long. With a rising wedge, it's supposed to break out of the bottom. And when we see it break out of the top, it often signals a blow off top, which is a reversal before dumping. So, this doesn't have to dump. And if you're looking for confirmation, you first want it back inside the wedge, and then you want it outside the wedge on the bottom side. It doesn't owe us that, but that's what we would be focused on. And if you're looking for metrics before getting in, I'm going to be looking for a test and a rejection across that 209 and look for this thing to dump. It had a nice run, right? And while I don't want to say things like it needs to pause or it owes us a pause or it's overbought, you got to kind of figure this thing is going to see some profit taking soon. I would be looking for that profit taking. A nice fade back to the 190 could overshoot it a bit and get into the 180, but I would not expect a deep pullback, right? We're talking about maybe a mild pullback and then a continuation of this. This is a gap up. And I know, on equities, you get those gaps from earnings and things like that, but a gap up on a weekly or a monthly is a big deal. So the low on this is 134.27, and the low or the close 133.42. So there is a gap down here. Not very much, but there is a gap. And that means this bullish move is expected to, I mean, it's already happened, right? So now we're just looking for it to kind of top out, pause. And there's also the 5 candle rule. It's 1, 2, 3, 4, 5. Can anticipate a pause or a little bit of a pullback. So lots of names to focus on this morning. Certainly opportunities everywhere. My focus is going to be on semiconductors and the FANG names themselves with a backup in finance. That'd be really where I'm looking. I'm already allocated enough into energy. I have no reason to look in that direction. And for day trades, while energy has a lot of names worth day trading, the other things that we've been focusing on has better liquidity. So that's where I'm going to be focused. Everybody, be careful, be safe, have a good day. Watch the clock. We have those auctions this afternoon, 11, 11:30, and 1 o'clock. See y'all tomorrow.